please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome to Bazaar Morning Call. I'm Lata Venkatesh and with me is Sonia Shenoy. We are still missing Anuj and I think Anuj will miss yet another big high in the markets. We don't know. Actually, there is no let-up in the global bull charge. They're continuing their grip and only improved it across the United States and now even in Asia as well, probably because the trade fears have now been pushed back a bit. Be that as it may, what did we do with the bull charge yesterday? Although we had scaled heights of 11,070 on the Nifty and well past 36,000 on the Sensex, we faltered at higher levels and ultimately the gain was only with Reliance, the HDFC twins and a couple of banks. So the question we now ask is there enough spunk in the global bulls and in the domestic news to take it beyond probably 11,100 mark? You know, the foreign funds again yesterday, day before we got a positive number, a minor positive, but again yesterday it was a sell mode number. Now, I think that the inflation number was very positive. That can be a bit of a tailwind for the finance stocks, the banks. There's a very good capital goods number coming from the IIP. So that should help the L&T types. Let us see if with those two, there is a bit of a pole vault over that 11,070 mark that was yesterday's high. But what do you think, Sonia?
Well, hi, good morning. It's Friday the 13th today,
okay.
So you perhaps want to, be a bit cautious, as the old tale goes. But anyway, we're less than 2% away from record highs. So we're virtually at record highs. And I think what this market has taught you this year is that you stick to quality names, you stick to market leaders and you'll make money, right? Whether it's Reliance, HDFC Bank, HUL, Kotak Mahindra Bank, even in the broader markets, names like Britannia, Marico, Bajaj Finance. But Lata, you were talking about tailwinds. Another tailwind this morning perhaps is crude, because Brent crude has fallen once again below that $75 a barrel mark. So that's another positive thing. Also, Infosys earnings comes later in the evening. But ahead of that, maybe we could see some buying. Because, I was just discussing with Rima, the stock Infosys is now trading at almost a 35% discount to TCS. Yeah, and the numbers are expected to be good. Constant currency growth is expected to improve versus what we saw last quarter. So give and take everything, perhaps we could see some more participation from technology
Actually, you
stocks.
put your finger on it. Until now, when the markets were meandering, it was either IT or banks that performed. On the days when the dollar was strong and the rupee was weak, you would have IT perform, but banks falter. But today, there could be something good going for both sides. For the banking stocks, there is global crude prices and domestic inflation, which is reined in. And for the IT stocks, the start given by TCS may well be expected in Infosys. And it anyway comes after market hours. So the market may want to take that bet. So you're quite right. There is that combo available. But traders will remember that yesterday we faltered at higher levels. So really, we have to wait for our tech gurus to tell us which way the wind may blow. Okay,
well, it is the end of the week, so we have that, big weekend upon us. We have a lot of guests joining us to tell us how to approach what has been a really good week for the bulls. Let's take a look at what our wise experts have to say as we head into trade this morning. Christopher Wood of CLSA says the trade issue can come back and hit stock markets at any time. He says one obvious trigger would be Trump's threat, if followed through on to impose a 20 to 25% tariff on global auto imports. He says such a move would almost certainly trigger retaliation in the auto industry and cause a renewed focus on the peaking out of globalization and the retreat from Pax Americana. He says such big picture issues are hard to discount or price, but they are not bullish. Chris adds that any perceived further retreat from Pax Americana by America, in line with Donald Trump's rhetoric, will continue to be viewed by China as an opportunity to expand its role as the champion of free trade. So maybe this, back and forth is not over just yet.
Yeah, that's the larger picture, of course, that probably America is ceding terrain to China by its behavior, but it immediately doesn't help stock markets. For us, the immediate view is that markets are bullish at the moment and they believe the trade fear has been pushed back for now. Let's get money market views important today because of the numbers we got yesterday. Bhaskar Panda of HDFC Bank says overnight the dollar index has rallied a bit and risk rally is back in Asian markets. He says US yields are also up. As inflation picks up in the US, he adds global crude prices adjusted downward, which had a positive impact on the USD INR yesterday, and this will continue today as well. Hence, he expects USD INR pair to trade in a range of 68.30 68.50 today. So basically rooting for a slightly stronger rupee.
Okay, let's also get a view on the bonds. Bhaskar Panda says the Indian CPI has inched higher and core inflation has also remained stubborn. Thus, he says the 10-year benchmark yield, which adjusted downward yesterday, may look up today. He expects the 10-year benchmark bond yield to remain in that 7.8 to 7.90% range for trade today.
Okay. Well, over to Nigel now for the world view.
Well, the U.S. markets, they bounced back overnight. All the three frontliners ending in the green. The Nasdaq was relative outperformer out there. All those tech-related stocks, they did well overnight. You had the likes of Amazon, Facebook, as well as Alphabet did well. That was from the Nasdaq. But even from the Dow, the top winners really were IT and tech-related. So they're up for you on the screen as well. Intel as well as Microsoft doing very well out there. Earnings season is underway. Delta Air came out with its set of numbers, looked good. Stock was up close to around 2%, so it's been a good start to the earnings season. European markets as well, all the three frontliners, they ended in the green in yesterday's trading session. Media sector, that was top of mind, that was top focus. The UK government had cleared Century Fox bid to buy Sky. So the stock Sky was up close to around 2%. Remember, they were in a battle with US company, that's Comcast. Otherwise, emerging markets, it was a mixed bag. The Brazilian index bounced back. It was up close to around 2%. Remember, just a month ago, it even breached the 70,000 mark odd. So it's had a good rally from the recent lows. While Asian markets are doing well, barring the Shanghai, that was doing a relative underperformance. The SGX Nifty, though, is indicating green on the screen because Brent crude prices as well have cooled down overnight. Back to you.
Oh, yes. Thank you very much for that, Nigel. And that will be a big tailwind for us, that crude is now making lower highs, perhaps, at least the indication from the last 8 weeks. And therefore, the big story for us today remains the market. Arvind Sanger, Managing Partner of Geosphere Capital Management, joins us now. Good evening, Arvind. Thank you very much for sitting up for us out there in the United States. First up, there are two things going excellent for the market, for the Indian market. One is, of course, crude now even below the $75 mark. And, of course, excellent numbers from TCS. Do you think now we could be in a new sphere, take past that 11,170 mark?
I think it looks like we're close enough that if the global bull rally continues, then the Indian market on what should be a pretty good earnings season could see at least get to, if not exceed, its previous highs. But, whether that is a breakout to higher levels, there's a lot of global risks. And so we're not making the bet that any breakout here is going to be a sustainably breakout level without any risks along the way. But I think the good news is that the Indian company's earnings season is off to a good start. And we should get some good results and some good signs of momentum from companies across different sectors. TCS obviously is more reflecting global customers' demand for Indian IT services, but we think more domestic basic companies also see it.
Okay. Arvind, hi. Good morning. How things have changed, right? I mean, less than 3 weeks ago when we spoke, this market was full of risks and there was a potential to move on the downside. But now suddenly the tide has turned. Be that as it may, one thing that this market has taught you is that stick with market leaders, at least this year, whether it's HUL, Kotak Mahindra Bank, Reliance Industries, all at new highs. You think this would be the order of the rest of the year as well?
Well, so, the mid-caps are clearly lagging in a big way. And it is a very narrow rally. The problem with narrow rallies is either they broaden or they fail. And to me, the jury is out on which way that will go, because a very narrow rally, which causes the index to go higher without broad-based participation, is not a healthy sign. So we'll have to wait and watch. And I know people are declaring victory on the oil front. I continue to be of the opinion that this oil pullback is temporary, and depending on how quickly and how aggressively the Iranian sanctions are applied, and also how the global supply-demand plays out, at some point here, oil is going to make another run for it, because if you see the back end of the curve of oil, the back end of the curve of oil is moving up, and the front end may be artificially depressed because Saudi Arabia is pumping out more oil for the short term. So I think that remains one risk factor. And the other risk factor remains global potential risk from trade. So, is China going to blink and back down and come to the table and do a deal with the U.S., or is China going to dig at its heels? So these are, things that I'm not confident one way or the other to make a big call. So we remain somewhat cautious when looking for opportunities to buy individual names. And the rally right now is not that convincing because it's so narrow.
Oh, I take your point that things are a bit dilly-dallying in the crude market, though we are at the moment rejoicing the $74 mark on Brent. But Arvind, just a word on the global bull rally as well. I mean, it's looking pretty unstoppable, and emerging markets were actually the laggards for the last 6 months. Is that changing a bit at all? Is some money now, I mean, a couple of days we saw positive long positions from FIIs in the Indian markets as well. Are emerging markets getting a better look in?
I think so. I think people are getting over the idea that, Fed is going to keep raising rates, but that's not going to kill the global rally. And if global growth looks fine and oil doesn't go up too sharply, then the lagging, global markets start to look attractive. And I think, the time correction has been quite dramatic, and the currency pullback has been made them attractive also. So I think that in that sense, if the U.S. market continues to lead the way, then it provides an umbrella for global markets to follow. And I think that, at the end of the day, one of the things I should say, one of the reasons to be bullish is the market is getting used to President Trump being a somewhat Brinkman-style negotiator, but not one that is looking to blow up the global system, just push it harder than people have been used to being pushed. And if that does produce positive outcomes for the U.S. and the world, then I think this rally could have a lot of legs in emerging markets too, because emerging markets clearly have been bearing the brunt of fears of trade war.
Just to talk about individual sectors, then you briefly mentioned your view on the IT space, but after the good earnings that TCS has posted, does it make sense to put fresh money to work here? Because the tone of the management was very positive this time, specifically with regards to the improvement in the BFSI vertical.
Yeah, I think absolutely. I think the IT space makes sense. I think that we've seen enough signs that the fears about the H-1Bs and the fears about clamp down on outsourcing, all of those are passing, and the Indian companies have right-sized and stabilized their focus on the digital versus the traditional channels of business, and therefore I think that we could see the next wave of the growth cycle, especially for those companies that have right-sized themselves sufficiently for a new round of kind of outsourcing, which will be more driven by digital and more products, and some of the mid caps also give us a lot of interest because of their positioning in that market.
Okay, Arvind, what about the consumer space? I mean, FMCG. The Hindustan Unilevers of the world delivered good numbers last quarter and have become very pricey. But yesterday we got the industrial output numbers, and they gave consumer non-durables, which is like their word for FMCG, a minus 2.6 for May. I mean, one thought all those numbers will be good because of the supposed uptick in rural demand. How are you approaching this consumer goods space, FMCG?
Well, we have, for better or worse, missed most of the FMCG stocks for the last year because we find them priced for perfection. And therefore, we don't know what to make of the May data, whether there is real, stress here, and whether, higher fuel prices are causing any slowdown. But we haven't seen, we're seeing broad-based industrial recovery, industrial capex, industrial confidence. So we're more interested in that than in the consumer. But I don't think the consumer side is going to roll over. I just think the consumer is fine, and I think you're right that the rural demand should be coming in. The question really becomes one of how much of the good news is already embedded in these stocks. And that's part of the reason why, except for very select consumer names, the broader FMCG sector does not seem to be particularly underpricing the upside opportunity that exists there.
Okay, just to persist with that capital goods point that you mentioned, incidentally, the industrial output numbers indicated a very strong growth in capital goods. over April and May combined, the growth is 9% or 9.6 if I'm not mistaken. I mean, is there still value in the L&Ts? What exactly would you look at?
Yeah, well, there are, there's L&T. There are companies that provide construction-related equipment that are interesting. There could be some engineering construction companies that are more infrastructure-focused that could be interesting. So I think that the overall broad base, and cement has been a good sector, but could this be another leg in the cement cycle, especially if real estate starts to kick in? I think, so therefore there could be many ways to play a recovery in the capex cycle, which has been completely missing, other than roads and a little bit of other government-led capex. But if the private sector capex and if housing start to recover, then those could be additional catalysts for some of the companies in that space.
Okay, then one final question from our end, Arvind. Yesterday, the big talking point was how Reliance Industries has reclaimed that $100 billion market cap mark. Fresh aggression seen in the telecom space from them. Do you expect more upsides here?
Well, I think that it's an interesting situation because refining margins, the traditional Reliance business, are not doing that great when one looks at Asian benchmarks. So that can't be good news for Reliance. But at this point, people are much more focused on the outlook for Jio and what that might mean in the retail business. So the retail business is clearly doing fine, but the big driver is going to be Jio. And to the extent that there's signs that pricing is pressures are alleviating, and that could start to turn up, and obviously the customer acquisition has been phenomenal over the last few years, then this could be an engine for Reliance. So I think this engine will be the driver, and the telecom sector is one, frankly, that we haven't been much involved in. But Reliance today becomes a telecom play rather than an energy play. So that's the way we're thinking about it.
All right. Thank you very much, Arvind, for staying up for us and giving us your thoughts both on the macro markets, the macros, and of course, individual stocks. We have to now shift to another stock-wise and important story, the Fortis story. We're going to concentrate a great deal on this bid coming for Fortis, the winning bid from IHH. We are back in a minute with our entire research team to detail the top 10 list of stocks and analyze the Fortis offer more deeply.
Hi, welcome back. The big story this morning, the Fortis deal is finally done. The board has approved the binding proposal from IHH Healthcare for an investment of a whopping 4,000 crores via the preferential allotment. Now, IHH will make an open offer to shareholders for Fortis Malar. Ashok Seth, the chairman of Fortis Health Institute, joins us on the phone line to talk about that. Thank you, sir, for joining us. If you can just start by telling us what your own view is of how things would change for the industry now. IHH is a relatively new player in the industry, perhaps not as experienced as well. What do you think the challenges are, and how do you see this whole deal play out?
Okay, I think the first thing I want to say is that it's welcome because it puts an end to a long period of uncertainty, which was certainly affecting operational issues and morale of all the staff of Fortis Healthcare and especially the doctors. And had it stretched on any longer, it could have affected patient care. So it is just the fact that everyone of Fortis, all employees of Fortis Healthcare, stood resiliently that this had to happen. Now, as we go ahead, we are obviously looking at a new era in the healthcare industry with the IHH coming in. We are all very clear that at the end of the day, any organization which comes in now afresh has to aim for clinical excellence and world-class patient outcomes. We always keep talking about the business angle of it, which could be important, but for us, also very important is how the healthcare is delivered to the patients. And we hope that with IHH has a track record of extensive clinical processes, improved outcomes. We look at quality care, and they seem to have that in well, and they've got a track record of experience in providing high level of care. They have understood the contribution of nurses and paramedical staff over a long period of time, and they have been involved in quality and research. So we hope that those very cornerstones of delivering healthcare are with them. They are an experienced group of people. Very importantly, I would also have to say that I'm glad, or we are all glad, that we are moving away from short-term investors who may have been in it for financial gains. So long-term investor who probably would partner with the ethos of belief of delivering high-quality healthcare. Of course, it's going to have challenges as a new entrant into the Indian arena. But then, healthcare...
Yeah, Mr. Seth, that is exactly the point I wanted to touch on. You know, a two-part question, really. Do you think it will be a smooth transition to IHH on the part of Fortis itself? All new management changes bring with them their challenges. And secondly, the space, as my colleague just pointed out, becomes a little more competitive with a deep-pocketed, well-experienced investor, IHH, coming into the Indian hospital market. So how do you see the Fortis transition internally, and how do you see the competitive milieu changing?
Okay, so I think this is going to be an exciting partnership. See, the healthcare is going to be delivered through the clinicians and the nurses and the doctors. That's very clear. We must not forget that the ethos of delivery lies with the clinicians, and we want this to be a partnership. IHH would remember that this is a partnership, and therefore the transitions obviously will happen, but they're going to be gradual. And finally, the strength of IHH and the strength of the long-standing clinical force of Fortis Healthcare are the two combinations which are going to deliver healthcare. You must remember that IHH comes in as a partner into delivering healthcare. It cannot deliver healthcare without the strength and excellence of the clinical work of Fortis Healthcare, which already exists.
Mr. Seth, you know, I just wanted to ask you about the challenges in the hospital space, because there are concerns about additional price control. There have been issues with regards to overcharging, and the Delhi government is considering many factors in terms of subsidizing per patients, etc. In such an environment, do you think that maybe a domestic player would have probably been much better to navigate these challenges as opposed to an IHH?
Not necessarily so. I think cost-effective healthcare is a standard of care, perhaps in every sphere and in every country. While challenges of every country are different, the whole ethos still revolves on cost-effective and high-quality care. We just do not consider quality cost, but we consider quality. And IHH is going to bring in a lot of its processes into place. I expect that I know those processes because I've traveled to some of those hospitals in Singapore and Malaysia. And with those and some of the benefits that they can provide to us, we are very positive that we would be able to provide that element of partnership which brings in cost-effective quality care to the patients. So I think it's an exciting area. Those challenges are to be met, but they're positive challenges and can be met with this combination.
It's a very positive statement coming from you, Mr. Seth. Thank you very much indeed for joining us with your first thoughts. And I think there are two important takeaways from what Mr. Seth is saying. One, of course, that it is someone in the hospital business and not someone who is who's interested in just financially ramping up and moving out at a later date. And secondly, that it ends uncertainty, I can imagine, from an employee's point of view.
Okay, yes. So finally, it's come to an end, right? This whole long saga. But we will keep discussing this story through the course of the day. For now, we have plenty of other stocks to talk about. Our list of top 10 stocks for the day. Of course, post those inflation numbers coming through, you could expect some impact on banks, etc. Lata, which ones are you watching out for?
Well, the usual suspects. I see yesterday, because of the crude price drop, the bond yields fell from 787 to 778. You know, it's a 9 basis point, almost a 10 basis point fall. Today, with the serious disinflation in food, they probably will move towards 7.7. And we also have the crude tailwind continuing at $74. In fact, a little lower than where it was same time yesterday. So I would assume positive for Nifty Bank, positive for PSU banks because they have a lot of bonds, and positive even for some NBFCs. Just let me add on the IIP numbers. There I would think there's a bit of a tailwind for capital goods stocks like L&T, and a bit of a negativity for FMCG stocks because those non-durable consumer goods looked very ugly, minus 2.6.
Okay, so we'll keep an eye out on that. But at a time when a lot of the IT companies are doing well in earnings, Cyient reported a disappointing set of numbers. Rima joins in. Rima, a fall in revenues from Cyient?
Yes, we were expecting muted numbers, a decline in revenue, but the decline was more than what the street was anticipating, and that's why it's a disappointing set of numbers. So dollar revenues have fallen by 2.3% quarter on quarter. Expectations were for a 1.5% decline. Margins are down by nearly 190 basis points to 12.2%. On the back of lower other income, higher taxes, and lower margins, the profits have fallen by 30%. The margins this time were impacted on account of the wage hike as well as lower utilization. That said, despite a soft start to the year, the company maintains its full year FY19 guidance, which is that services segment will grow, see a double-digit growth. Design-led manufacturing, a part of the company, will see a 35% growth, and they maintain their margin expectation, which is flat margins for the full year. So weak Q1, so the stock could be under pressure today.
Okay, thank you very much for that. And then, of course, to the big story, Nisha is with us. Nisha, just lay out the contours of what happened overnight.
That's right, Lata. So it's a mix of preferential allotment of shares and putting in 4,000 crore rupees into Fortis Healthcare, and an open offer giving a clean exit to the shareholders worth 3,300 odd crore rupees. And this whole deal is at a 20% premium to the current market price at 170 rupees per share. But remember that the open offer can be at least at 170 rupees per share. As per the SEBI formula, it can go higher as well. So we need to wait and watch out for that one. The key shareholders, Rakesh Jhunjhunwala and Yes Bank, are going to be watched out for. Their nod is really required.
Okay, all right, we'll keep an eye out on that. But for now, the other IT stocks are also in focus today. HCL Tech is on our radar. Reema, over to you.
4,000 crore buyback, Sonia. The price is at 1,100 rupees per share. That's a 9.3% premium to where the stock closed yesterday. And remember, the stock has already rallied 6.5% this entire week. If the promoters don't participate, then the acceptance ratio is at 6.5%. If the promoters participate, then the acceptance ratio will be at 2.6%, so quite low. The expectation is the promoters who have a 60% stake will participate in the buyback, so the acceptance ratio will be low. They had participated last year as well.
Okay, thank you very much for that, Reema. Let's get to other bunch of stocks and wrap up this top 10. Anisha, you have a bunch with you.
Well, yes, I'll start with Avanti Feeds because the stock has been under pressure, and the management alluded that there were some concerns regarding Thai Union continuing as an investor in the stock. Now, yesterday they clarified that the Thai Union says that Avanti Feeds is a long-term and strategic associate for the company, and the shareholding will continue to remain in 20 to 25%, which is currently close to 24%. So must be a breather for the investors today. Moving on to Som Distilleries. Well, yesterday they informed the exchanges that there'll be a board meet today itself, and that is to preferentially allot around 36.8 lakh shares. Now, a quick calculation told me that this can be around 13% of the company's equity, and this would be at a price of around 271.55, which is 20 rupees higher than current market price, and can be to the likes of Cast Peak Asia Master Fund as well as Vermilion Peak Master Fund. So that will be in focus as well.
Okay, thanks a lot for that, Anisha. Well, here's a quick recap then of our top stocks to watch. Stocks with positive news flow this morning: SBI, HDFC Bank, L&T, HCL Tech, Fortis Health, Avanti Feeds and Som Distilleries. While stocks that have some negative news flow today: HUL, Cyient and Apollo Hospitals. So do keep an eye out on that. We will take a quick break on that note. Our technical experts Ashwini Gujral, Mitesh Thakkar and Prakash Gaba